Good day, ladies and gentlemen. So in this video I'll be teaching you how to actually scalp the forex market. Okay, there are so many scalping strategies, but this strategy I'll be teaching you is specifically for scalping. Okay, so if you love to get into the market and also exit within a short period of time, then this video is for you. Okay, so this strategy is a scalping strategy. All right, so what do you need in order to execute this particular strategy? Okay, you need two major things. First, you need to be able to mark out highs and lows. So you must be able to mark out highs and lows. So once you can do that, you are good to go. That's the first criteria. The second criteria is for you to be able to identify a three candlestick pattern. I'm going to teach you the three candlestick pattern. So once you can identify this three candlestick pattern and you can mark out highs and lows, then you have all you need in order to execute this particular strategy. Okay, so the thing is, this three candle pattern usually occur at key levels, which are usually highs and lows. That's the reason why the first criteria is for you to be able to mark out the highs and lows. So when price gets to this high and low, you are looking to see if the pattern is going to form. If the pattern does not form at a high or a low, then it's a very low probability pattern, so you probably should not even trade it, so you don't lose money. Okay, but if it happens at a high or a low, I'm giving you a 90% assurance that it is going to play out just the way you want it to play out, okay, in your favor and help you make money. Okay, so what's this three candlestick pattern? Okay, I don't think I need to explain how to place high and low. I feel you should know that already, but let me just quickly go over it. So this is an high right here. You can see this is an high right here, so you can just place an horizontal line right there like this. Okay, so you've marked out the high, and this is a low down here. All right, you just place horizontal line like this to mark out the low. Okay, so definitely this is also a low, but the low got broken and the new low was formed. So you already know how to mark out highs and lows, so let me not say too much in that direction. Let me go to the three candlestick pattern. So the three candlestick pattern, what you want to see is, if you're looking to buy, your first candle is going to be something like this. For example, let me go down a bit. So your first candle is going to look like this, for example. So this is your first candle. All right, the second candle most times is the candle that takes out the liquidity of your high or low. Okay, so that second candle must be the lowest candle. Its wick must be the lowest, okay, out of the three candlestick system. Okay, so most times it's that second candle that does what? That takes out the liquidity of your low or high. That's why we need to mark out the high and low. So that second candle takes out the liquidity. If you see that happening, then you know that yes, it's your system that is about to play out. Then the third candle must engulf both the first candle and the second candle. All right, so the third candle could be something like this. Look at that. Do you see it engulfed both the first candle and the second candle? That's the way your third candle should be. Okay, sometimes it might not engulf it completely. Sometimes it can just be maybe equal to it like this. Where is the eraser? Let me clean some of this off. Sometimes it will just be equal to it, just like this, okay, so even if it is equal to the first candle, you are good to go. It's still the system, so you can still enter it. Okay, but it should not be less or lower than the level of the first candle. Okay, the ideal scenario is for it to be, this third candle to be higher than the second candle and the first candle altogether. But I'm giving you, like, from experience, I noticed that sometimes when it is equal to the first candle, it can still is still going to play out as usual. Okay, but the one you cannot bypass is that it must be higher than the second candle. Okay, it must be higher than the second candle, but from time to time it might be equal to the first candle but not higher than it, equal to the first candle but not higher. If it engulfs the second candle first candle completely, then it's just the way it is supposed to be. All right, when you see the examples, you understand what I'm trying to say. Okay, so that's the three candle system that you need to actually master. So I have two examples for you. From the two examples, I'm sure that if you had any let's say you didn't really understand the way I drew the candles, it's going to be clear for you to actually see. All right, so look at this right here. We have an eye right here. Okay, we have an eye right here, and what do you see playing out? The three candle system. Look at this. This is my candle number one. That blue candle right there is my candle number one. What do you see happening? The candle number two took out this eye. Do you see that? Candle number two took out this eye. Then what do you see happening to the candle number three? The candle number three is this one. You can see that it went beyond this and this. It covered both completely. Okay, so it is higher than this and this. All right, look at the level of the first candle. What happened? The third candle went beyond that. What I was trying to say the other time is that sometimes it can just be exactly at the level and it might not really go beyond the first candle. If it's like that, it's still good to go. You can see enter your trade. So the question is, how do you enter your trade? Something else you need to know is that you need to be able to mark out the 50% level of your third candle. That is where price is going to return to most of the time. Okay, if you enter immediately when the third candle closes, you are going to go into drawdown. So I'm giving you an extra tip. I'm giving you extra tip that can help you reduce drawdown. So most times price retraces up to 40 to 50% of the third candle. So what you can just do, you can just get an horizontal line. Okay, once you see your third candle has closed, you quickly get an horizontal line like this. You check where do you think the 50% is going to be. Okay, so once you get your 50%, then you do what? You enter a pending order to sell. As you can see, price returned to that level and gave us a beautiful sell trade. Price returned to that level and gave us a sell trade. Where will you take your profit? You can take your profits at the level price got to before it returned to your 50% entry, or you can just target 1 to 3 risk to reward ratio. Your what's it called? Your stop loss should be a few pips above the third candle. Okay, a few pips above the third candle. Whatever you've risked, you can target 1 to 3. Most times you give you up to 1 to 3 risk to reward ratio, so it's a good setup. The only issue with the setup is sometimes it's a little bit complicated to find. You need to be very what's it called? Is it sharp, or how am I going to put it? You need to be very diligent. Yes, that's the word. You need to be very diligent to be able to spot it. Okay, spotting it is where the problem is. But if you can spot it and you find out that it took the second candle took out a high or a low, you are good to go. You are making money with that particular setup. All right. So let's look for another example. I think I have I marked out two examples. Here is the second one. Okay, so this is the second example. All right, so what do you see here? There's an eye right here. Okay, there's an eye right there. Yes, let me mark out the eye very well. So there's an eye right here, and I had my three candle system. So you can see this is my first candle, this blue candle. Like I said, the second candle is usually the one that sweeps the liquidity. You can see the second candle sweeping the liquidity above this eye. Okay, above this eye. So the second candle swept the liquidity, and then you have the third candle engulfing both this first candle and this second candle. You can see this was almost equal. This one I was talking about is almost equal to the level of the first candle. So you are good to go. It's still the pattern. All right, it's still the pattern. So all you just need to do, like I said, you can enter immediately, target 1 to 3 risk to reward ratio, stop loss a few pips above the third candle. You can do that if you want, if you're an aggressive trader. Okay, but most times to avoid drawdown, price will always retrace to up to 50% of the third candle. So you can just use your eyes to gauge it and say, oh, if this is my third candle, where is the midpoint? The midpoint should be somewhere around here. Okay, you can just use your eyes to gauge it, and you place a pending order right there. Okay, so that will help you avoid unnecessary drawdown. Okay, so price can just put you in a very small drawdown and then push in your direction. As you can see, this candle moved up a bit before displacing to the downside. Hope you can see the candle right there. Talking about this one. Okay, can you see that candle just after our third candle? So that one pushed up a bit and then displaced aggressively downward. This would have given you a nice 1 to 3 risk to reward ratio. This will even give up to 1 to 5, but let's just take 1 to 3 and not be greedy with the trade. Okay, so basically that's just how the setup is. You just have to be diligent to be able to spot it, wherever it forms, and then take the trade accordingly. All right, so if you got any value from this video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.